Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories within corporate filings, and today we're diving into Flagstar financials. Latest report, and let me tell you, there is a bit of a shake-up afoot that you'll want to know about. Get ready for a deep dive into a major business transformation at Flagstar Financial Inc. We'll break down exactly what is happening and why it matters to you as an investor or just someone curious about how big companies operate. Alright, so it is the 15th of October 2025 and Flagstar Financial Inc., which you might know from its stock ticker Falgi, is filing a report with the US Securities and Exchange Commission, or CC. This is essentially a public announcement about important company events, and this particular report is all about a big internal change, a corporate reorganization they call it. The main event here is a plan to merge the parent company Flagstar Financial Incorporated with its own bank subsidiary Flagstar Bank N. Think of it like the company is simplifying its structure by becoming one with its bank. The bank will continue to exist, but the parent company will essentially be absorbed. This is known as the merger proposal. Now, for any of this to happen, they needed to get their shareholders together and vote. On the 18th of August 2025, the record date for voting, there were over 415 million shares of common stock. Fast forward to their meeting on the 15th of October 2025, and a significant chunk of shareholders showed up or had their votes cast by proxy. A whopping 324 million shares were represented, close to 78% of all outstanding shares. That is a strong turnout and shows a lot of engagement. They needed this to have a quorum, meaning enough people were there to make the votes official. Let us look at the actual votes for this merger proposal. Shareholders voted overwhelmingly in favor of the plan of merger. Out of the shares voted directly for or against, we saw over 323 million votes for the merger and just under 700,000 votes against it. Abstentions, meaning shareholders who were present but did not vote on this specific item, were about 450,000. This is a clear mandate from the shareholders and signals strong approval for this structural change. Beyond the merger itself, there was another related proposal, the conversion proposal. This was about converting the company into an interim federal savings association prior to the merger, and again shareholders gave it a huge thumbs up. For this proposal, close to 323.5 million shares were voted for and only about 725,000 were against. Similarly, about 450,000 shares were abstained. These high approval numbers for both proposals indicate the shareholders are fully on board with Flagstar, a strategic direction to simplify its corporate structure and become a federal savings association. The company also had a fallback proposal they called the adjournment proposal. This was basically to give them the option to postpone the meeting if they needed more time to convince shareholders or deal with any unexpected issues. However, since both the merger proposal and the conversion proposal were approved by such wide margins, this adjournment proposal became unnecessary, and its vote results were not even officially announced. They were rendered moot. This just goes to show how smoothly and decisively these matters were handled. It is worth a quick mention what Flagstar Financial is actually known for on the stock market. Their common stock trades under the ticker FLG on the New York Stock Exchange. They also have what they call bifurcated option note unit securities, which trade as FLG PRU, and depository shares representing preferred stock trading as FLG PRA. These other securities show the complexity of Flagstar's financial products and how they are traded by investors. Now, my take on all of this. What Flagstar Financial Inc. is doing is essentially a significant internal restructuring. They are simplifying their corporate form by merging the parent company into its bank subsidiary. This kind of move is often done to streamline operations, reduce regulatory complexity, and potentially improve efficiency. The overwhelming shareholder support suggests that investors see the strategic benefit in this simplification. From an investment perspective, this isn't a fundamental shift in the business operations themselves, but rather how the business is legally structured. The bank, the core business operation, remains. The key is whether this simplification will lead to the expected operational efficiencies and cost savings that management is likely aiming for. A notable risk or opportunity here could be regulatory approval of the new structure. While shareholders have voted the final say on the conversion to a federal savings association, and the merger still rests with regulatory bodies, should any of these approvals be delayed or denied, it could create uncertainty. However, given the strong shareholder vote, it suggests the company has likely done its homework with regulators. Looking at the numbers from the shareholder votes, the high participation and approval rates indicate strong confidence from those who hold shares. This is a good sign for the company's leadership and their strategic vision. It's a bold move, and one that shows the company is actively managing its corporate identity and structure. Alright, that is our breakdown of Flagstar Financial's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.